Hi guys, my name is Bon and welcome back to my video. Today we are going to be talking about something that I think is pretty fascinating, and that is the 2020 financial crisis investing strategy. We are going to be talking about what's currently going on in the world and how that leads to a set of assumptions which leads to how my strategy works. Now, let me be a little bit more specific. This strategy is only for Boeing, Marriott, and Carnival. It's only for those three companies because those three companies are the biggest companies in the world for their industry. Boeing is the biggest player in the airline industry, Marriott is the biggest player in the hotel industry, and Carnival is the biggest cruise line in the world. And the reason why I keep talking about these companies is because these companies are the most undervalued company in the world right now. There are very few companies out there that are more undervalued than these companies. Obviously, Boeing, Marriott, and Carnival all have competitors. However, their competitors are not the type of companies that I want to recommend to you guys. Why? Because it is a very perilous time right now in the stock market. It is very, very difficult to tell who will make it out on top after this whole financial crisis ends. Therefore, I would never want to recommend a company to you guys that might have a possibility of going bankrupt. Yes, these three companies that I'm mentioning could very well go bankrupt. But my logic is if the biggest companies in their industry is going to go bankrupt, everyone else is going to go bankrupt. So they have the least possibility of going bankrupt. Because if Boeing goes bankrupt, okay, say goodbye to airlines. If Carnival goes bankrupt, say goodbye to cruises. If Marriott goes bankrupt, no more hotels. Where else are you going to say? Airbnb? These three sectors are the most affected by the coronavirus, and that is why they have dropped the most out of any other companies out there. Therefore, they have the most to gain once this coronavirus is over. So, this is how I would manage the 2020 financial crisis to minimize my loss and maximize my gain. Also guys, like any other video, please be very careful with your money, right? Do not invest money that you do not have, and do not play around with money that you are using for food or rent. That is very, very scary, and it's not going to benefit anyone, especially yourself. Oh, also, I forgot to mention, please hit the like button, okay? It would really help me out because this video is going to take me 10 plus hours to make. Alright guys, and now let's get started. But before I do, I'd like to say that this strategy is only for the financial crisis, specifically this financial crisis, and specifically geared towards Boeing, Marriott, and Carnival. I do not recommend using this strategy for anything other than those three companies, and I do not recommend using it when we are not in a pandemic like this. So the strategy will probably only last for 2 to 8 months, depending on when the coronavirus will die off. Okay, so for the rest of the video, we are going to be talking about what's currently happening right now and how that leads to 3 assumptions, which will lead to understanding the strategy that I have. Alright, so what is currently happening right now? So right now, there is a stay-at-home order issued by President Trump. The order is effective till April 30th, and we have no idea what's going to happen after April 30th. There is a very good chance that he could extend it to May 30th. But currently, the whole month of April is a stay-at-home month. So what about the vaccine? The earliest mass production of the vaccine is going to be somewhere around December. Inovio Pharmaceuticals is one of the first companies to get FDA approval for a human trial. They have been funded by the Bill and Melinda Gates Foundation to rapidly increase their discovery of the vaccine. This article from the Jerusalem Post states that depending on the success of their clinical trials, the pharmaceutical companies could have 1 million doses available by December. That means that vaccines are still about 8 months away. However, it goes on to say that approval for official use, however, will likely take about a year to 1.5 years. That's quite a long time. Now, what does that mean? That means that America won't be running at 100% capacity until they have a vaccine. And when I say not 100% capacity, I mean that it'll probably run similar to how it is now. Of course, America is probably gonna adapt to this quarantine situation, but the social distancing rule will probably still be in effect until they found a vaccine. Just because the number of cases are plateauing doesn't mean that we can go out and be social again. I feel that we've been so focused on the number of cases rising that we think that once the cases stop rising means that the quarantine will be over and then we can get back to our normal lives. But that is not the case. That is far from the case. If we go back out right after the cases plateau, so then we will have the same situation all over again, and the cases will shoot up right back. There are two ways that we can return back to normal society. The first way is to develop a vaccine that works and can treat everyone that gets the coronavirus. The second way is mass immunity, and that means that everyone is going to have to get the coronavirus, and anyone who survives is going to be immune to the virus. Yeah, the second way seems like it'll cause a lot of deaths, like in the millions and millions of deaths. So probably not that way. And that leads to the last point, which is the longer the virus lasts, the more likely the companies will suffer. And when I'm talking about companies, what companies am I talking about? I'm talking about Boeing, Marriott, Carnival. Any company whose core business is based on social interactions and getting people to go to different places and meet other people will be affected, especially companies that are related to travel, because those companies are the ones that have the highest risk of spreading the disease and getting more people infected. Okay, so based on what's happening now, such as the stay-at-home order and the timeline for the vaccine, these are the three assumptions that I am basing my financial crisis investment strategy on. Assumption number one, stocks are undervalued and will go up. But specifically, I'm talking about Boeing, Marriott, and Carnival. All of them are valued at less than 50% of where they were in February. These companies are the ones who are most hit by the virus, and these companies are the ones most likely to suffer within the upcoming 5 to 8 months. Why are they most likely to suffer? Well, the vaccine won't be available until around December. So these companies are going to stay low and probably won't recover until at least 2 months from now, and that is a very, very gracious estimate. Realistically, they probably won't see any real good flights until 2021. This article from the Atlanta Business Chronicle says that Delta predicts 90% revenue decline. Berkshire Hathaway sells nearly 13 million shares. And the first sentence of the article reads, Delta CEO Ed Bastian says his company has not yet hit bottom, as it is ravaged by fallout from the novel coronavirus pandemic. That means that they are likely going to suffer for the next few months, at least 1 to 2 months. They need to hit rock bottom, and then after rock bottom, they're probably going to stay there and then go back up. I'd say that takes at least 2 months, at least 2 months before the airlines can recover. All right, assumption number three. Assumption number three is that they are volatile. Why? Why are they volatile? Why is Boeing, why is Carnival, why is Marriott volatile? And this is not just me making a random assumption, okay? These numbers are in the stock market, okay? Boeing went up 10% today. It's gone up 15 to 20% within the last 3 days. Carnival has gone up over 50% within the last week. And Marriott has also had 20% gains. So why are they so volatile? Okay? They are volatile because everyone knows that these companies are undervalued. They are very, very undervalued, and they want to go in. Once they're in, they can sit there and just let it ride, and then they know that they can double or triple their money within a few short months to a year or two. That is one reason why they're volatile, because everyone wants to buy it when it is low. The second reason why it's so volatile is because there are people who have been saving their money for the last 3 to 5 years because they are expecting another crash. And they finally got it. So when they got it, they are putting a lot more money into the stock market and trying to manipulate the stock market to their advantage. Stock market manipulation happens all the time, and it happens now. There's no reason why any of these companies should be going up 10, 20, 30% within a week. They are pretty much dead, okay? They can't do anything. There are almost no flights, there's definitely no cruises, and hotels are empty. They're going up because people are manipulating the stock. And this is the best time for them to play, because stockbrokers are like gamblers. And this is the best time to gamble because things go up really fast and things go down really fast. And gamblers, they want to hit those highs. This volatility is going to last for the next 1 to 2 months at least. And the stocks that are most affected by this volatility is, you guessed it, right? Boeing, Marriott, and Carnival. So, how can you take advantage of this volatility to maximize your profit and minimize your losses? Well, that is what this strategy is all about. Let's go. All right, well, that took a while, but now we are on to the strategy. And this is a 3-step strategy, right? So make sure that you follow every step. And let me reiterate this, okay? This is only for Boeing, Marriott, and Carnival stocks, right? Do not apply the strategy for any other company. Okay, so step number 1. always buy. Do not sell short these stocks because you have no idea when these stocks will just randomly go up and shoot up back to where it was before. And if the stocks do that, you are going to lose 200 to 300% of your money. And you might not have that type of cash. So always buy and do not sell short. Number 2, wait for low points. This is where we take advantage of the volatility of the stock market. These stocks have been going up and down since March, and they will probably continue for the next 1 to 2 months. So you should take advantage of these ups and downs, because a lot of these ups and downs have a difference of 20 to 30 to 50%. And the best way to take advantage of that is buy when it's low and sell when it's high. Well, obviously, okay, no duh, Bon. But hold on, let me explain. Since you know that these companies are going to go up after the pandemic, there is no risk for you to buy these stocks. If you buy a stock at a high price, then who cares? I mean, eventually it'll go higher. I can tell you with 100% certainty right now that if you buy these 3 stocks right now, okay, you guys will make a profit within 3 years. Okay? Guaranteed. Okay? Within 3 years, you guys will make a profit because they are so undervalued. Okay, they will definitely go up after the coronavirus is over. Okay? So there is almost no risk for you guys to buy it. But if you want to be a bit more active in the stock market and find those lows and sell on those highs and get those 20 to 30% profit, okay, you should definitely do it. Okay, so what do I mean? Okay, so this is Carnival, and this is the Carnival stock. It is currently at $12.11.99. So as you can see, on February 19th, okay, it was trading at a high of $43. After a month of really horrible drops, it went down to $11.55. Okay. That was how crazy it is. But after it dropped down to 11 something, it went all the way back up to a high of 19. It made $8, okay? So that's an 80% profit. And then what happens? It loses steam. Right? Like anything, volatility in the stock market loses steam all the time. So after it loses steam, it dropped back down. It dropped down pretty quickly from March 26th all the way to the very bottom on April 2nd. Okay? That is a 1 week time span. And in that 1 week, it dropped down all the way down to $8. Dropped down to $8 from a high of $19. So how do you take advantage of this? So the way you take advantage of this is that you buy it when it's low. So you see that it goes from here, right, at 9.30, and it went up to 17.80. That is almost 100% profit. So all you do is that you wait, right? The worst thing about this strategy is the waiting game. Right? You have to wait till it goes up all the way, and then it starts dropping down again. Right? And when it starts dropping down again, you need to have an idea of when you want to enter the market. Right? Do you want to enter it at $12 after it hit 17, or do you want to enter it at $8? Obviously, the lower the better, but you don't know how low it's going to go. So what you do is that you put a limit on when you want to buy it, set it there, and forget about it. And another rule that I have for myself is that I always set it at 10% lower than what I think I should buy it at. So let's say Carnival. Let's say that Carnival was here at $12.80 and $13.17. So it's around that price. For me, if I'm comfortable at buying it at $12, I would set it at $10. The reason for that is because these 3 stocks are not going to go up anytime soon. Right? There is no reason why anyone should be traveling or vacationing in the next 1 to 2 months. So I know with a good amount of certainty that it probably won't go back up. Right? There's a very good chance that it will go down even lower. So I try to set my buys at a very low point. So for me, I am okay with waiting for it to go down. What I did was that I set up 3 buy limits. I set up limits to buy Boeing, I set up limits to buy Carnival, and I set up limits to buy Marriott. For Boeing, I set it at $100 because it was currently at $125. For Carnival, I set it at $8 because, I don't know, I just didn't really care. And for Marriott, I set it at around $50. The reason why I set all 3 of those buy limits was because I knew that if it had just a random disastrous day, okay, it'll hit those numbers and my bets will pay off. Right? And one of my bets did. Right? I bought Carnival at $8. After $8, I was still actually kind of afraid, so I set another one up for $5.50. Right? Obviously, Carnival didn't go below $5.50, but it just went up to $12. And then I sold it at $11.50. So that was a 45% gain for me because I saw that, oh boy, it's getting pretty high and it's kind of leveling off. It's losing steam. So I just bought it, and then I think it's going to go back down again. And there's no reason why Carnival is going to go up from here on out. There's absolutely no reason. So I sold it, and then I'm going to wait till it goes down again. Same thing with Boeing, same thing with Marriott, okay? Boeing is now at like, I think 150, 160, right? Marriott is at $80. So wait till next week. Next week is probably going to be a very down week because we've had a lot of steam this week and then everything is on the rise. There's a very good chance that next week or the week after it's going to go lower, and then that is going to be your chance to go in. And remember, even if you buy Carnival at like $10, right, it is still fine. All you need to do is wait. Right? If you buy it at a higher price, then you'll probably have to wait longer than other people. But I guarantee you, all of these stocks will definitely grow over the next 1 to 2 to 3 years. Right? So whatever stock that you're buying right now is not a loss. But also remember, this strategy only lasts for the next 2 to 8 months. Right? So be very careful of any time after that. These stocks could very well go up and never fall back down again. But within the next 2 months, I say that you guys are pretty safe to buy at a very low point and sell at a high point. It'll go back down. There's no reason why these companies should be going up within the next 2 months. And the third part of the strategy is to layer your trades. Do not put 100% of your money into a stock because that is very, very risky. It could very well just never go back up again. Instead, what you should do is buy it in layers. So what do I mean by that? What I mean is, let's say that you think that $12.80 is a good buy for the Carnival stock, and you want to put $5,000 into it. So what you do is, instead of putting $5,000 into Carnival all at once, you cut it in half. Okay? You put $2,500 at $12.80, and then you set another limit at, let's say, $8, so that you can cover yourself if things go wrong and then it goes down again, so that you have some money to buy back some more stock. And buying $2,500 at $12 per share is a lot different than $2,500 at $8 per share. So let's recap. Always buy. Right? Even if you buy right now, you are still making a profit. So there is no need to worry about when to buy the stock. Right? The stock is already very, very cheap. But if you want to be more involved in the stock market, wait for low points because these stocks are very, very volatile and they go up and down. If you hit it at a low point, you can make a lot of profit. Then just leave it there, wait till it goes higher, right? Get 10, 20, maybe 30%, maybe 30%, and then sell it off. Right? Because within the next 1 to 2 months, it will definitely go down lower. Right? So there's no problem worrying about that. And 3, layer your bets. Right? Make sure that you have money left over to buy more stocks if it goes lower. Because there's a very, very good chance that all of these stocks can go lower. A lot lower. And that is my strategy. Let me know what you guys think about it. Is it like a duh bond? Okay, that's so obvious. Okay, I didn't get anything from this video. Well, for that, I'm sorry. I thought it was entertaining. Comment down below yes or no if you found this video helpful. Alright guys, thank you so much for watching. I hope you guys enjoy that. If you guys like the video, please give it a thumbs up. It takes me hours and hours of editing and recording to do this. So a thumbs up would really help. And if you like the topic that I'm talking about, please subscribe so you can see some of my other videos. Alright, so thank you so much for watching and I'll see you guys next time. Bye.